Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're diving deep into Intel, ticker INTC. It's a really fascinating situation with the chipmaker suddenly right at the center of national strategy. Our mission in this deep dive is basically to unpack this paradox. How can a company, now seen as this $8.9 billion strategic asset for the nation, still be on Wall Street's sort of wait-and-see list? We've dug into our research. This is based on data from August 28, 2025 at 8 a.m. Eastern, and, well, the answer is surprisingly complex. Okay, let's set the stage first. The market mood. It feels like a tightrope walker right now.
Yeah, definitely leaning one way than the other.
Exactly. Pre-market futures are a mixed bag. You've got the Dow showing some green, but the NASDAQ, the tech-heavy index, is in the red.
Screams anxiety, especially in tech.
Right. And on top of that, we're bracing for just a fire hose of economic data today. Jobless claims, GDP numbers.
And those whispers about a potential U.S. recession are getting louder, aren't they?
They really are.
And if you connect this to the bigger picture, you can see the market is just on a knife's edge, really, waiting for something. Understanding this backdrop is, well, it's crucial because even really strong company news like Intel's can get overshadowed by this broader economic uncertainty.
Yeah, that makes sense. A very cautious lens on everything tech right now. So, given that pretty delicate market backdrop, Intel's recent news is even more intriguing. Here's where it gets really interesting. Intel. They've secured this historic agreement. $8.9 billion. Basically giving Uncle Sam a stake to supercharge American chip manufacturing.
It's huge.
It's not just a win, it feels like a massive long-term strategic anchor, tying Intel right into the nation's tech ambitions.
Absolutely. But what's fascinating, truly fascinating here, is the immediate market reaction. Because on paper, that looks like a golden ticket, right?
You'd think so.
But while the long-term story seems great, Wall Street is, well, they're largely lukewarm.
Lukewarm is a good word.
A staggering 86% of analysts are just sitting on hold.
86%?
Wow. Yeah. So this raises that big question. Why? Why so much skepticism?
Okay, so what's the thinking there?
Well, it seems to boil down to a fear of the long game. Analysts are looking at the massive spending required for these new factories, the multi-year wait for returns, and maybe even the potential for government involvement to kind of slow things down. Agility concerns.
Okay. So despite the cash, it's a huge bet on a future that's still years away.
Exactly. And the market often wants that show me the money now proof.
Right. That analyst caution makes sense then, especially with those longer term points. Does that show me the money feel also play out with, say, the broader crowd? How are investors positioning?
It's a bit quieter on the sentiment front, actually. Our research shows the options market is leaning optimistic.
Oh, interesting. How so?
Well, put-to-call ratio is 0.6. Pretty bullish. Basically means investors are buying almost twice as many calls bets on the price going up as puts. They're clearly dreaming of that 26 a strike price.
Okay, so options traders are hopeful?
Yeah, and get this, short interest. Incredibly low, just 2.46%.
So almost no one is betting against Intel right now.
Virtually nobody. Which is significant because it means there's basically zero risk of a short squeeze happening.
Right, where a price jump forces short sellers to buy back and fuels the rally even more.
Exactly. So while analysts are holding back, you've got this sort of steady, quiet confidence brewing among options traders and the short sellers, or lack thereof.
Okay, quiet confidence in some corners, despite the shaky market and analyst holds. Let's look under the hood then at the price chart itself. The long-term trend, that's undeniably positive. It flipped bullish recently. But here's the twist. The volume signals are fighting each other.
Uh-oh. How so?
One measure seems to confirm buying pressure is there, but another one, it's flashing a warning sign, suggesting money might have actually been flowing out.
Oof. That disagreement is, that's a genuine red flag.
Why is that typically a red flag?
Well, it often means that maybe retail investors are buying in, but some of the bigger players, the institutions, could be quietly taking profits. Suggests not everyone's convinced by the rally.
Gotcha. Not all the big money is on board yet.
Right. And momentum, it's accelerating, but it's also showing some early signs of maybe losing steam.
Okay.
And volatility has calmed right down. The stock's kind of coiling in a stable range.
Coiling, like building energy.
Exactly. Classic technical pattern. Building energy for a potentially sharp move, could be up or down, but it's not showing its hand just yet.
Okay, so putting it all together, what does this mean for you listening today? After sifting through all our research, the cautious macro, Wall Street's skepticism, that quiet options optimism, and these conflicting technicals, Our verdict is pretty clear. It's a wait-and-see approach.
Makes sense. The government deal is a powerful long-term plus, no doubt.
Huge plus. But the immediate trading environment, it's a bit of a minefield with all these conflicting signals. So your game plan for today, think of the $25 level as the battleground.
Key level.
If Intel can decisively break and hold above $25, then the path looks open to test that $26 target the options folks are eyeing.
And the downside.
Downside, look at yesterday's low. $24.05. That's your line in the sand. If sellers push below that, well, it signals the bulls couldn't hold it and we might see a deeper pullback.
Yeah, it really shows, doesn't it? Even an $8.9 billion vote of national confidence, it just can't buy you a clear path on Wall Street right away.
Not automatically, no.
The market is still, checking the expiration date on Intel's golden ticket.
That's a great way to put it. The market's checking the expiry date. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Ultimately, this deep dive shows us that even with the full weight of national strategy behind it, a company's market fate isn't solely in Washington's hands. It leaves us wondering, how much is a golden ticket truly worth if the market still has to check its expiry date? Thanks for tuning in, and we'll catch you on the next episode of De-Risk.